The man who runs this company, who came up with the idea of this company in a dorm room little more than 8 years ago, a billionaire many times over, on paper at least, worth north of $19 billion, enough to propel him into one of the richest people on the planet. So what is the take from Facebook's first trading day? We are all over it with FBN's Dagen McDowell on if ordinary folks got swept up in it and maybe too much into it. Market watcher Ed Butowski on why today's relatively lackluster performance could be a very good thing. Lawrence Simonetti on how Facebook's newly minted millionaires reacted to all of this. And why Michael Reagan on why they should fear the tax hit they're going to be getting after all of this. We begin with Dagen. Hey, Dagen.
Hey, Neil, it was still an epic day, a frenzied day, and a rough day for Facebook. Priced at $38 a share, it was still the most valuable American company ever at its time of a market debut, and a record number of shares traded hands for a market debut, more than 500 million shares. But let's start with the beginning of the day. The stock opened half an hour late at 11:30 a.m. Eastern Time. Traders were having a tough time getting information about those very trades, but the stock popped at the open. It was at more than $42 a share. That was up almost 11% from that $38 price, but then it fell back to that level within a half an hour, and you see it closed thereabouts that level at 4 p.m. this afternoon, so no major pop to talk about. But this company has more than 900 million users. People know its story. They know its history. They know its hooded billionaire babyface co-founder, and they were still excited about this IPO.
In at 38, to see something like that go public is pretty unique.
900 million people have it. That's why. Everybody uses it. I'm in.
I haven't bought the stock, but I definitely would.
That's a huge deal. Yeah, biggest IPO in history. That's it's great shot in the arm for the capital markets. Great shot in the arm for the United States.
But clearly still people were cautious, and we heard from some of those people out here in the streets, and they were taking a wait-and-see attitude about buying this stock. Are you excited about Facebook going public today or starting to trade?
No, I'm going to wait to see what happens to it before I put any attention on it.
I think it is a little overhyped.
I thought about it, but I decided not to. Too much hype. I thought the price might run up and then take a dive.
Well, Neil, what we do know is the size of this offering was up by 25% this past week. It was priced at the very high range. So you didn't get a pop, but you did get a whole new crop of millionaires and billionaires. Back to you.
You're right, Dagen. About 1,000 of them. Can you imagine that? Great job as always, Dagen. You know, no big pop for Facebook stock on its opening day, but as Dagen pointed out, remember, this kept getting ratcheted up ahead of the offering. Remember, they first talked about it being offered in around the 20s a share, then 30, then 32, then 34, then it was ratcheted up to $38 a share. So, you know, this is kind of the eye of the beholder. So while investors might be disappointed by the ultimate performance, market watcher Ed Butowski says all of this is actually a good thing. Explain, Ed.
Well, what we don't want is we want markets to be realistic. And what we don't want, is for something to be a bubble. And if this stock went much higher than where it opened up, and quite frankly, I think it's going to go a lot lower from here in the short run. I think there's been some support. We do not want to see unrealistic prices. We want to see prices that are absolutely realistic in the market, and we don't want to see people getting in there and then thinking that it's like gambling. And so I'm very, very happy this thing did not pop. It's 40% overvalued, Neil. Make it real simple. Right now, the stock is 40% overvalued based on expected earnings, and I don't even know if that's a real good number. I think we're going to see this thing trade down, probably down into the low 30s over the next couple of weeks.
All right, but if it's 40% overvalued, you could make the argument that this should be worth no more than the low 20s.
Some people can make that argument, especially in light of what's going on in the world economy right now. Now, that could change very dramatically if certain things take place. You know, about 21 days after a stock goes public, then they can start making, research reports come out and new announcements come out. So there's a quiet period still. So, but based on what we know right this moment, this stock is about 40% overvalued, and I'm happy that we didn't see a big pop in this right now.
You know what? There were such high expectations built into this offering, and maybe just the social enormity of it, the fact that it has 900 million users, the fact that it was so incredibly hyped. it's very hard to live up to expectations like that. And I do wonder whether the company brought this on itself, or whether those who were bringing it to this day brought it upon themselves. That when you have so many shares out there, and ahead of the fact you've been ratcheting up the price of those shares, it's almost impossible to see them certainly do the double and tripling thing.
Well, it all comes down to valuation. Remember, 80% of the volume in this stock, if not more than that today, were all institutions. And institutions don't look at the popularity of a company. They look at the valuation of the company. That's why if you look at historically, the best IPOs on day one are mostly companies you've never heard of before, because the valuation that was placed on them was dramatically, was low, and the demand for it was very high. Again, the popularity does not equal price performance. And the media did get a hold of it. Everyone was talking about it. You couldn't go anywhere without talking about it. But that doesn't mean that it's going to make it for a good stock or a good day one, which we saw today.
All right, real quickly, if you're right on the course from here until it stabilizes is down, that would be keeping with a theme with IPOs of any sort, that they start strongly and can't maintain that, and they sort of struggle. And then they sort of get a beachhead, and then they're off. If they're good, they're off to the races. Amazon comes to mind, eBay comes to mind, even Microsoft comes to mind.
Yeah, Neil, I'll throw in another thought. About 10 days from now, people are going to be able to borrow shares and start shorting this stock if they chose to. There's a lot of downside left potentially in this, and plus 90 days later, the lockup comes off. So I think we're just going to keep seeing a lot of selling pressure on this, and individual investors don't make stocks rise. Institutions move the market, and institutions are the ones that really don't like this company. So be careful. Buyer beware. The person who bought it at 45, I think, is going to be real sorry a couple of weeks from now.
All right. Thank you very much. Ed, being the brilliant guy, has mentioned a couple of things that might go by you. When you short a stock, you're trading based on the opportunity you see for it to go down. You make money when you bid on that stock possibly going down. That's what shorting's about. You might also hear about individuals who have large odd lot positions, that sort of thing. That too is betting on that sort of phenomenon. Meanwhile, today's debut might not have been stellar, but there are a lot of Facebook employees who just got a whole lot richer. To FBN's Lauren Simonetti and NASDAQ on just how rich. Hey, Lauren.
Hey, Neil. Growing from a college dorm room just 8 years ago to now the biggest tech IPO the world has ever seen, it's really remarkable. And in the process, Facebook has minted 1,000 of its more than 3,000 employees millionaires, just like that, newly rich. So what do you do with millions of dollars? Well, you buy big homes, right, and fancy cars, and that's exactly what's happening. Mark Zuckerberg, the CEO, he just bought a $7 million home at the company's headquarters in California. In fact, wealth managers in the area say that they've seen so far this year, in the run-up to this IPO, they've seen real estate prices jump by some 10%. Even the car dealerships, you've got Tesla, Fisker, McLaren, they're all out there. They're hoping to see their cars on many of those millionaires' driveways. So that's definitely a trend that has been noted and will continue to be noted. But you know what? Neil, millionaire or not, Facebook treats its employees, all of them, like millionaires. Take a look at what you get when you work at Facebook. You get barbecue shacks, fitness centers, on-site doctors and dentists, even laundry facilities. Sounds a lot like Google. So all of this is pretty good for the state of California, too, the very cash-strapped state. Just want to point out that over the next year, the California State Budget Office says that they expect $2 billion added to their economy because of this. And that's it from me, Neil. I'm probably going to go home to do my laundry this Friday because we don't get it here at work.
Well, I mean, there are sinks. I mean, all right, Lauren, thank you very much, Lauren Simonetti. Will California's high tax rate force these new millionaires to flee? Michael Reagan says if they're not packing yet, they should be. You know, Michael, what's kind of interesting about this, when the folks at Sacramento there put out a budget that factors this in, that factors paper profits into real monies that they can use to close a budget gap. And it's not real money yet. I mean, a lot of these guys are locked up. They can't cash out yet. So I think the state's taking a couple of leaps there.
Oh, but they've been taking that for a long time, Neil. They're playing three-card Monte up there in Sacramento. Remember, the deficit in January was $9 billion. Last week it was $16 billion. It's going towards $20 billion. And the answer is to raise taxes. So every one of those millionaires, if Jerry Brown gets what he wants in November on the ballot measure, each one of them will have a 30% increase in their taxes. Now, what do you think they're going to do? Most of the people who are making those kinds of monies are now leaving the state. Corporations are leaving the state. Apple left the state. I wouldn't be surprised if Facebook picked up and left just like the co-founder.
You know, there's always that fear, I know, but that was the case with so many of these startups that make a big Wall Street debut. They're in a high-tax state. And oddly enough, they stay where they are. I don't know why that is, and there is an allure certainly to being in Silicon Valley. You're surrounded by like-minded, very, very smart people. I'd be more worried about people who get a lot of money and don't have the impetus to work anymore. But do you think that many would decide, all right, I got my money, I'm being taxed to death in California, I'm out of here? Or is the state betting and looking at the record that rarely happens?
No, that doesn't rarely happen. 4 million people have left this state in the last 20 years. 4 million people that have moved into the state of California. 5 businesses a month are leaving the state of California. If you want to visit your California business, you have to go to Texas, you have to go to Utah, Arizona, and someplace else. You have a governor who just, 3 weeks ago signed an executive order saying that every 10,000 square foot government building in California by 2025 is going to have to be self-sufficient and provide their own power source. It has to be wind or solar. No, we've got it. It's out of control here in the state of California. Businesses aren't coming here. Businesses are leaving. Not only are they leaving, they're taking their workforce with them when they leave. That's why when they looked at the receipts from the taxes in April up in Sacramento, they had another shortfall, because that is what is going on in this state. And the answer isn't raising taxes by 30%. Youthful young couples are leaving the state of California and going elsewhere and providing the tax dollars to the other states, not to the state of California. The beaches are pretty, but that's all.
Well, you have some nice mountains and big trees. I mean,
yeah, we have some nice mountains too. But when
I was thinking of your dad.
But you have the haves and the have-nots and the haves.
I understand. But I'm thinking of your dad when Microsoft debuted in 1986. Talk about a very favorable economic environment that was in the middle of a bull market, and it was the wind, I think, at Microsoft's back. Now we have a wind confronting a lot of these guys. More regulations, potentially higher taxes to come. I'm not even addressing the California issue. I'm addressing the national issue. You worried?
Oh, absolutely. The national issues. You have the President of the United States the other day changing the biographies on all the presidents except for Gerald Ford, and putting into my father's biography there at the White House webpage that Ronald Reagan would have supported his Buffett rule. I tweeted a challenge to the President of the United States saying, I will debate the President of the United States any place, anywhere he wants to, one-on-one, on Ronald Reagan supporting or not supporting the Buffett rule put forward by the President of the United States. It's an outrage.
You're still waiting, I guess, on that. Michael Reagan, thank you very much.
I'll be waiting for a long time. Because you know something? I won't use the teleprompter.
Okay, now that's a little mean. All right, when we come back...